Hi there, welcome to Grain TV. It's Monday, April 11th, a very volatile day in the grains. Let's take a look at the grain edge trading platform and see where we closed. In Chicago, wheat got beat up, losing 14 cents in Chicago, 17 in Kansas City after weather conditions seem to be improving in the next week in the plains. Corn was also lower in sympathy with wheat after a week-long advance, so we were down 5 3/4 on corn, and beans continuing to defy gravity, gaining 10.5, getting close to that pivotal 930 mark. News out today. We started on Sunday night with some news on palm oil stocks in Malaysia, which have been a topic of conversation because of the El Nino problems down there. Palm oil stocks in March in Malaysia were down 13% versus expectations for only a 10% drop. Part of that was the result of much bigger than expected exports. So that got soybeans off to a very good start, getting up to that 923 mark on front month May. As we got back into the day session, we got some big strength in the Brazilian real. We've been off on Thursday and Friday, but really bounced higher on today's trade with the Brazilian real. So that currency was up sharply, gaining almost 3%, which certainly gave shorts in the bean market a reason to cover. Other news out today, we're sort of marking time a little bit till tomorrow's supply and demand report, although the report is not expected to show much. It doesn't have any of the new 2016 forecast information, which we will be looking for in May, but nonetheless, we will be watching that, and most people will be at least basing trading on what USDA says in that April report. But before we get to the expectations of that report, let's talk about export inspections that came out this morning. In this report, we got good news for both corn and beans. Corn coming in well above expectations of 1.1 million metric tons when we were only looking for about a 775 to 975,000 metric ton week. Beans are continuing to be strong, coming in at 386 versus 100 to 300,000 expected. And wheat, yet again, hitting a infield single with 339 million metric tons. 339,000 metric tons versus 250 to 380 expected. Looking at the scorecard year to date, these are sort of in line with what we saw on export sales. Corn is off 14% in actual export inspections year to date versus last year. USDA looking for an 11% drop. And then beans are slightly better with only a 7% deficit from last year versus 8% from USDA. And wheat continues to be the struggler. We saw last week export sales are actually 17% below last year, and export inspections in this case are 13%. So still quite a bit of room here in wheat for, I think, USDA to revise down their export numbers. And with little left in the marketing year, we're looking at about 6 weeks left. I don't think there's much room here for us to get a turnaround. Let's take a look at what analysts are expecting in the USDA crop report coming out tomorrow at 11 o'clock Central Time. Very minor changes expected. We're looking for some modest increase in corn carryout and wheat carryout because of the poor performing exports. Soybeans, it's sort of hit or miss. There are some analysts thinking that USDA may actually have to cut exports, that our exports aren't good enough. Some saying they may have to raise exports, in which case we would lower ending stocks. So it's sort of a push on what analysts expect on beans. So watch for these numbers tomorrow, again, 11 o'clock Central Time. We will be tweeting these at Grain TV on our Twitter account if you want to get those live until they come out. Other things I wanted to talk about today. Let's take a look at this wheat market that's just gotten hammered here in the last week, really, as the forecast in the plains has improved. And we haven't got there yet. We still haven't got the significant rain. But coming into Sunday night, the weather in the next weekend looks very favorable, and it's actually looking more and more favorable every time those models get run. So we're looking for very, very good weather precipitation in that dry, hard red winter wheat plains area of Kansas, Oklahoma, and Texas. And that's really what the market is trading. We beat it down substantially today, almost down to the lows in July. Chicago wheat, the low being around 450, we closed around 454. And when you look at this chart, this daily July Chicago wheat chart, we see almost what looks like a double top here. And if you trace out this double top that would project us down to a low of 444 or a target of 444. And I don't think that's out of the realm of possibility here. This market is very negative. There's no export business to speak of. Our prices are still not competitive in the world market right now. And we have good weather in the plains. So I don't think it's out of the realm of possibility we continue to push lower in this wheat market, even as bad as it's been the last few trading sessions. That's all we got today on Grain TV. As always, join us or follow us online at grainhedge.com if you have any interest in taking a look at our trading platform or want to see how GrainHedge can help you in your own trading and marketing situation. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.